Here are the 5 top mistakes retail traders make and how you can avoid them. Number 1 is a lack of patience. Traders come and go, they feel that they can learn a strategy and become consistent and profitable with that strategy in 30 days or under, and that's a big misconception. It's like the times where I ran a gym and people would join, they would hope to get the beach body in 30 days. If by day 29 they didn't achieve that or see little or no difference, what do? They quit, they throw in the towel, they cancel their membership. There's nothing different between that and what I see traders coming into the retail space. They're looking to add that extra thing, that extra piece to the puzzle that's missing, refine their plan, or even switch their strategy completely. And they still have that same mentality that it should only take a few weeks or 30 days to actually master this. Even having the perspective that it's going to take only 3 to 6 months to really nail this down is still too short term. You need to have that long-term thinking. Remember, being a trader is about training the subconscious mind. How many hours does it take to train your subconscious? It's way more than just 30 days. So learn how to be more patient and avoid that pitfall. Number 2 is overtrading. So too much chart time, looking at scalping the market, spending 6 to 8 hours a day staring at the charts is not going to serve you. Less is more. This is one of the reasons why at Evolution Markets we switched to a higher time frame approach and a higher time frame entry model, because it helps those that work a 9 to 5 or those that are over trading actually spend less time at the charts. And this is going to do a number of things. It's going to increase their patience. It's going to reduce the anxiety. It's going to give you more time to do other things. And it's probably going to increase your strike rate as long as you are nailing down the right criteria. Let's say, for example, you were selling cars. You know that if you work 50, 60 hours a week versus your colleague that works 20 hours a week, you are probably going to sell more cars, right? And when you're at work, the more phone calls you make, the more emails you send out, the more prospects and customers you speak to, the more sales you will make, correct? Yes, you wouldn't be wrong. So does that translate into trading? No. So it doesn't mean that the more trades you take, the more money you will make. It's not necessarily the case. With trading, if you learn to be patient and actually sit on your hands and let the market come to you more often, that's one of the light bulb moments that you will achieve, and you'll realize that actually less is more. Then what you're doing is you're making it much easier for you to sit back and relax, wait for the criteria to set up, and then eliminate that need for overtrading. Number 3 is thinking that Forex trading is cool. Now, this isn't always your fault, right? The world of Instagram and the last 6 to 7 years easily has been enticing people into trading because of the laptop lifestyle, travel the world, in a private jet, sitting on a beach, making $10,000 a day, driving a Lamborghini, trips to Dubai. And yeah, you might be able to do that once in a while, but that's not the lifestyle. Trading actually, to be consistently profitable, has to be boring. Sorry, what do I mean it has to be boring? Well, you have to follow a trade plan. Everyone says that, right? But there's more pieces to the puzzle than just a piece of paper that says buy here and sell here. So if you're waiting for the same setup, it's going to be very same. Same is boring, but boring is consistent. Consistency equals results. If you're going to make things exciting, then you can go right down to the 5-second chart and you can scalp, you can buy 1 minute and sell the next, but you'll see your emotions are through the roof and your strike rate's through the floor. Number 4 for me is a big one. Choosing a trading strategy that does not fit your lifestyle. So let's say, for example, you work a full-time job. Let's just say you work 9 to 5. And let's say that London and New York trading session happen while you are at work. If you are trading a lower time frame strategy where the speed is quite high and there tends to be setups every day, you've probably got a maximum 5 minutes before you actually need to put a trade on if your criteria sets up. And you have a job to do at work, right? You're not a trader first and then an employee second. Until you make that transition to full-time trader, if that's what you want to do, you're actually an employee first. So you've got to get your work done and make sure that your boss, that's probably breathing down your neck to get the work done, doesn't see that you've got TradingView open or MT4, right? So if you're already putting unnecessary stress on yourself to look at the charts while you're at work, that's not going to end well. And if you're putting yourself under that amount of stress and anxiety and pressure week on week while you're at work, is that actually sustainable? Ask yourself, can I sustain feeling these emotions every day for the next 10 years? Because I guarantee the answer is no. So if you're at work, I'm not asking you to quit your job like a lot of other trading mentors do. Instead, find a strategy that you can use while you're at work. So again, it links back to not overtrading, less is more. Skip up a few time frames. Don't go any lower than the 15-minute or even the 5-minute is fine. As long as you have access to a laptop and a screen for a couple of hours a day, you're not going to be able to trade the lower time frames at work. You're just not going to be able to. What I advise those that work full time is use your directional bias based on the 4-hour as your higher time frame, and then use your entry time frame as the 15-minute, because it's quick enough to see opportunities every week, but it's slow enough that if you're at work, you can easily check your phone on a lunch break or sneak off for just 2 minutes, check your phone. Again, 15-minute time frame doesn't move fast enough to cause you any anxiety looking at your phone. So you can check that. You can set trades, buy stops or sell stops from your phone, and then you can manage that trade easily as well from your phone, or from very little chart time at a laptop if you're fortunate enough at work to have access to that, but still don't want to be caught out by your boss, right? So if you're trading the lower time frames and you're working a full-time job, which does not allow you the freedom to look at TradingView and your broker throughout the day during sessions, you need to rethink your strategy. And number 5 is chasing the money before you master the skill. Again, this links to number 1, which was patience, right? Everyone gets into trading because they want to change their life. They want to improve their lifestyle. They want to quit their job. They want to travel the world, be mortgage free, and drive a nice car. And there's nothing wrong with those things, right? But it takes time. So instead of focusing on the money, focus on the skill first. Again, this comes down to patience and discipline. If you wanted to be a doctor and you just finished school right now, you know for a fact you'd have 5 to 7 years of education ahead of yourself at university and college before you can even get that certificate. And even then, you've got to try and get the job. So why is trading any different? It doesn't matter if you're 18 or you're 38 right now. Even if it takes 5 years from this moment to be consistent and profitable, that's a realistic time frame. And 5 years isn't going to break you, and that time is going to pass anyway. So you just need to have that perspective and patience that you've got to learn the skill first, and that's going to take time. That learning process is almost more about finding out more about yourself than it is about a strategy, because you've got to find a strategy that works for you and your lifestyle, your work habits, your family life, your personality, your traits, and make it work for you. You've also got to have enough data, both history and live trading, to know that that strategy is sustainable and that actually works. What's your anxiety level when you're trading that strategy, and what's your strike level? What's your profit and loss at the end of each month and the end of each quarter trading that strategy? And you might find out after 18 months that that strategy doesn't work for you, so you go and learn another one, and you've got to give it time. That's why this process takes 4 or 5 years to be consistent. Let me know in the comments if you agree or disagree. So there's my 5 top mistakes that retail traders make. Thank you for watching, and subscribe for more.